Welcome back to MP Capital Strategies. Today we continue with the mining series. Barrick Mining was undervalued for a long time, but the market has caught up. The stock is currently trading at around 36 euros. So the question is no longer, is Barrick a bargain? Rather, is Barrick still attractive at this level, or has most of the upside already happened? In this video, we'll take a sober look at Barrick, cash flow, dividends, and the copper strategy. And most importantly, what can you still expect now and what not? What does Barrick actually do? Barrick Mining is the largest gold producer in the world, also strongly positioned in copper, active in North America, Africa, and Latin America, with a focus on Tier 1 assets. Tier 1 means low production costs, long mine lifespans, high operational security, and stable cash flow over decades. Barrick is not a speculative stock, not an explorer, and not a momentum play. Barrick is industrial quality in the mining sector. Let's take another look at how I am invested here. In total, I hold 8 shares at a purchase price of 15 euros and 84 cents each. Altogether, that's 126 euros and 73 cents. Current value, 36 euros and 36 cents per share, 290 euros and 86 cents in total at the moment. This corresponds to an unrealized gain of 164 euros and 15 cents, with a price increase of 129%. The dividend I have already received amounts to 1 euro and 80 cents. Now let's move on to cash flow, which is the core of the whole story. The operating cash flow is around $5 billion per year. The leveraged free cash flow is between 1.5 and 1.7 billion and the free cash flow is about 4 to 5%. This is not an exceptional year, but rather a robust level at normal gold prices. Barrick consistently generates cash, and that's exactly why you hold this stock. Now let's talk about valuation. Currently, we are at 36 euros. The forward PE is between 12 and 13. The EV/EBITDA is at 6 to 7 times. This means we no longer have a valuation discount, and the value gap has closed. Barrick is currently fairly valued, not cheap, not expensive, just solidly priced. Anyone buying Barrick is no longer making a valuation bet, but rather a cash flow cycle bet. If you also want to use InvestingPro, you can find the affiliate link below in the video description. Using my link, you'll get 15% off if you want to create in-depth analysis or if you want to check out reports. Barrick is not a yield monster, and that's intentional. The dividend yield is around 2% with a payout ratio of about 20. We have 39 years of dividend history. And the key point, we have a very low payout curve, room for increases, variable special dividends are possible, and parallel share buybacks. This is a very conservative capital policy and perfect for long-term cash flow strategies. Why do I still hold Barrick Mining among others even though I'm up 130%? A, because it's a smaller position for me, and secondly, because I also expect, since gold has risen so strongly, that they will possibly pay special dividends accordingly. That's why, as long as gold continues to perform well, I will definitely keep Barrick Mining in my portfolio. However, I will not increase my position at these prices. Now let's move on to the copper leverage, the underestimated part of the story. Barrick is increasingly becoming a copper player. Reko Diq, Pakistan, one of the largest copper-gold projects worldwide, with production starting in 2028. The project is expected to have a lifespan of around 37 years. An extremely low-cost structure is planned, and copper means energy transition, power grids, e-mobility, and data centers. Barrick is positioning itself for the long term, not just for the next cycle, but for the coming decades. And as you know, if you've watched my mining series more often, many mines are currently positioning themselves very strongly in copper. That's something that has really stood out to me during my research. Many are simply expanding in the copper sector. Now let's move on to the risks. We have, for example, Mali, the political conflict, temporary mine problems, and government pressure. But it is operationally profitable. We have no liquidity risk. The issue is political, not economic. The other risks are, of course, gold price volatility, emerging market exposure, and a cyclical sector. Important, the balance sheet is stable, the cash flow is strong, and the dividend is not at risk. My conclusion, so what should you possibly do now? Of course, this is not investment advice, but simply my personal strategy. Barrick is not a bargain. That means I would not make a new purchase at this time. And it's also no longer a momentum trade because we're relatively high up. Barrick is a stable core hold, a cash flow anchor, and if there are pullbacks, I would definitely consider increasing my position. What is my personal logic behind this? As I already mentioned, I am holding at the current level. I want to buy more if there is weakness, and I find it especially interesting at around 30 euros or below. You don't buy Barrick to get rich, but to stay rich. Now, I'm interested in your opinion. Is Barrick a solid foundation for you, or is it too boring for your portfolio? Feel free to write it in the comments and let me know. If you enjoyed the video, feel free to leave me a like. If you haven't subscribed yet, I would appreciate it if you did. Otherwise, I wish you all successful investing. See you in the next video.